Welcome to FXpert Trading, where I use time cycles, median lines, and other technical analysis to identify trade setups in the US stock markets as well as the FX markets. If you like the information contained within this video, be sure to subscribe for more. I'd like to start this video by saying thank you to all of you who have subscribed over the last month. I hope that you really enjoy these videos and you find them very educational and helpful. I would appreciate it if you'd please give me some feedback so I can improve these videos. I'm new at this. I'm not very good at making these, so any insights you can give me as the viewer, I would greatly appreciate. You can just leave those comments below, and I'll do my best to make any changes that you can suggest or anything I can do to help make them better for you as the viewer. I probably won't do this for videos during the week, but at least for this weekend's video, I'm going to split the overall market analysis and the individual ticker analysis into two videos. So if you could also please let me know in the comments below whether you like that idea or not, if they should be one video or if two videos is better for you. Please let me know and I'll do my best to take that into consideration going forward. Thank you very much for subscribing. I hope you enjoyed this video. This is the NVDA daily chart. We'll just talk about this really quickly. I discussed in the last video the median line sets that I have put up here. We did come to another median line and rejected from it, and then ultimately closed right above an upper warning / lower warning line. But in reality, right now, there's nothing tradable here as far as I can see. Is the top in? Maybe, probably for this 2-month cycle. This is actually longer than 2 months, but for this blue cycle, this top is probably in, as we've been expecting some weakness to come in eventually. But as far as the long-term top, probably not. I don't really think it's going to be possible to call the long-term top after just one day, no matter how bearish it is, even if it is a big engulfing candle like we have here. And if we were to look at the weekly chart, we have this big wick up here, but still, there's no reason to believe that this is going to be a long-term top. It's going to take a long time to really kind of determine whenever that comes in. We're back on the daily chart, and so as I mentioned before, there's nothing really tradable here. The purpose of monitoring this right now is just because NVIDIA controls the market. What the market does is whatever NVIDIA does. And so if this is putting in a local top, I would expect the market to be putting in a local top, and then we'll follow it as we come into this expected trough time zone. This is the Apple daily chart, and as I mentioned in the last video, I was expecting the trough to come in on Tuesday, Wednesday, or Thursday based on the distance from the 10 SMA that we reached on Tuesday. I used some historical data which suggested that after reaching a distance of 5% or greater from the 10 SMA, the local bottom would be formed, if not the same day, the next day, or the day after that. And we did get this bottom on Thursday. Now, does that mean the whole bottom is in for this 2-month cycle trough? No, it does not. All we were looking for was a break above a prior day's low. In this case, we got a break above 3 prior days low. We came up, we almost filled this gap. We traded above the 5 SMA exactly as I expected we would. And even with this big wick, even if we continue to sell off hard from here, that would tell us this is the 2-week cycle trough that we were expecting here, this orange cycle trough. It came in on Thursday. What we're looking for next is, in my opinion, a continuation to the downside beyond this expected trough date. I think this next 2-week cycle will be negative because the Qs are expecting a trough roughly around March 20th. NVIDIA is expecting a trough roughly around March 20th for both of their longer-term cycles. Now, Apple has disassociated itself from the rest of the market. While the market's been going up, Apple has clearly been going down. So it is possible this troughs earlier than the rest of the market, but I would expect it to trough with or even later than the rest of the market. So a break below Friday's low, or if we put in a higher daily low on Monday, then on Tuesday a break below Monday's low will suggest, if this is going to be a negative cycle, it will suggest that the high for that cycle is in, and we will be continuing further to the downside. I've mentioned in prior Apple videos what targets I have to the downside should we see another negative cycle. So I'm not going to discuss those in today's video, just what we should be looking out for, which again will be a break of a prior day's low. It would be ideal if it would also come after a rejection from the 10 SMA or this lower warning line here, which we nearly did reach, or if we even continue to the upside and we get rejected from around 180. Although if that happens, then I do think it becomes more likely at this point that the 2-month cycle trough is in. So I would like to see this happen somewhere lower than 180, and I'd also like to see it happen early in this 2-week cycle trough. If we look at the last couple of cycles, we can see this happened 1, 2, 3. On the 4th day, we took out the low, and here 1, 2, 3, 4. On the 5th day, we took out the low. No matter when it happens or if it happens, I will not enter any short position until after CPI, because if this does happen to be the 2-month cycle trough, we will get a lot of bullishness in what should be a short period of time. If we look at the prior 2-month cycle, this did double bottom, and the cycle trough I put at the first bottom, so it didn't have a ton of bullishness. But if we look at prior cycles, look, this is the 2-month blue cycle right here, bullishness, just straight up. If you've already watched this weekend's market video, and if you haven't, I suggest you will, I'll put a link to it at the end of this video. But I discussed how CPI could potentially be a catalyst that rockets the markets higher, including Apple. So the same is true for both Apple as I suggested for the markets. I want to wait until after CPI before I enter any potential positions. Yes, if the market is going to sell off, we may miss the initial thrust to the downside, but there's still plenty of time based on this cycle for the market to run to the downside, which means there's plenty of time still to make money if it is going to be a negative cycle. And that way, if it does turn bullish after CPI and this cycle is in, we'll have no problem changing our expectations to a more bullish expectation, and we can go long. That said, Apple might not be the best ticker to go long, although I would probably dabble with it. The reason why it might not be the best ticker to go long even after this 2-month cycle trough is in is because we have a longer term cycle which ends in mid-May, or should end roughly around mid-May. It can come in early, it can come in late. We actually recently came in very early on a 2-month cycle, although the positioning of these cycles right now is a little bit suspect. But I do believe we should expect, considering the markets as a whole, the current placement of this longer term cycle to be correct. And what that means is because this 2-month cycle has already taken out the low of the prior 2-month cycle, the remainder of the longer cycle, that pink cycle, should continue to be bearish, which would suggest we will highly likely take out whatever low we put in here, which also puts into danger this low over here. We might break this low, and again, whether or not we do it during this cycle, I mentioned some targets that I outlined in a prior video down in this area and potentially even further. We could definitely backtest this trend line, and there are some gaps further down which we could potentially reach for. I'm not going to discuss that now, but I do have a target here, this gap at 158.49, which would be the first target, which could again happen in this 2-week cycle, or we could trough here, or we could trough higher than the 158 for this 2-month cycle, even if it extends, and then in the final cycle get down there. Either way, the suggestion here is that whatever bounce we do get for the 2-month cycle, while it could be a pretty good bounce, could bring us back up to 180, I wouldn't expect it to go much higher than that before potentially rolling over and finding new lows after we put in this trough. This is the VIX daily chart. I'm just going to give a quick update for this. I got filled on half of my position for a profit of 94 cents. At 94 cents per contract, each contract cost $1.26. That is a 74.6. We'll just round it up and say 75%. So I closed half of this position for a 75% profit. I still hold half, and I think I will probably close the rest on Monday, just as I mentioned for Apple. And if you watched the other video for the markets as a whole, I don't want to be holding any positions through CPI. Or what I might do is maybe hold a quarter of this position. Maybe I'll just close a quarter of this position on Monday. It depends where VIX is at, because I might want to have just a little bit of exposure, only because even after closing the next quarter of the position, especially if it's at a profit, that will guarantee, even if that last quarter loses everything, I will still have made a profit on the position as a whole. That's the only reason why I would hold a little bit of it, so that way I could have some potential exposure in case there is a large spike in the VIX following CPI. As always, thank you for watching this video, and be sure to subscribe for more.